Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. And today we're going to go through Twitter, see what people are sharing on social media, like I normally do, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in there, take a look, and see what people are sharing. If you want to follow me, it's at Finding_Finance. And if you want to join our community, finding-value.com, where I dive deeper into these topics, into individual companies, and how I'm playing this commodity bull market that we are in. Eric Nuttall, lower 48 shale, oil production roughly flat both month over month and year to date as of May. The era of U.S. shale hypergrowth is over. So in his opinion, these big upward moves is probably coming to an end in his opinion. And maybe we see this thing go sideways or maybe even roll over or slowly go up. That is his opinion. The hypergrowth moves are done with. Another one from Eric. He says, we do not believe there's any political risk premium in the oil price given days of supply, which implies an $81 WTI fair value currently, in his opinion there. So we've got days of supply continue to go down and down at a very low level here at about 42 and a half or so, 43 days. And that is obviously much different than the 57, 58 days that we had in second quarter of 2020. So we've been drawing down inventories the entire time. And we'll see if we continue to get drawdowns or if this is a local bottom here and come back up for whatever reason. Maybe a slowdown in the market, we'll see. Lance says for every one household earning greater than $200,000 that moves out of Florida's housing market, almost three move in. A ratio under one means the state is losing more high earner households than it's gaining from out of state people. So it's in migration to out migration of people who are making greater than $200,000. The high tax states looks like they dominate that people moving out of their states with high incomes. Illinois, California, DC, New York, Massachusetts, Minnesota, these are all high tax areas at the bottom. Alaska is a low tax state, same with North Dakota. They got something else going on. Looking at the top ones, Florida, South Carolina, Idaho, Montana, Tennessee, South Dakota, Maine. And the ones that don't have any state income tax, zero, are Florida, Tennessee, South Dakota, Nevada as well. So there is a large amount of people who are making a lot of money, greater than 200,000, that are moving to states that do not have state income tax. I asked my wife if we should move, and she says, I don't really care. But I was looking at Nevada for a potential opportunity to move to save on taxes. Right now, Colorado, it has a flat state tax of about I think it's 4.4 or 4.5%. And if you move to a state that doesn't have any state income taxes, you can save a bunch on taxes. And if this commodity bull market turns out to be as big as what I think it will be, I'd rather live in a low tax state. And those states, there's a lot of good states even that you don't have to pay a state income tax. So you can find good places wherever. And obviously, some of the states vary quite widely between the western portion and the eastern portion of some of these states. Holger says there is a kind of convergence between the NASDAQ 100 and Russell 2000 year to date as investors shift their money out of big tech and into smaller stocks. And we can see that rotation here occurring, where we've got the NASDAQ 100 going down in the white line, and the yellow line of the Russell 2000 has been moving up at the same exact time almost. So Russell 2000 working its way on up, and the NASDAQ 100 working its way down, at least in the short term here. Parker Ross, he says the June job openings and labor turnover survey, the JOLTS, showed hiring continued its multi-year cool down, but so did separations, quits, layoffs, retirements, etc. While the pace of hiring typically rises during expansion, this cycle has instead been driven by separations slowing down alongside slower hiring since early 2022. This leaves the economy in a relatively fragile state despite solid job gains in recent months. A deceleration in hiring or acceleration in separations could lead to a quick downshift in job growth. More details on the underlying trends in his opinion, but private sector hiring is still cooling off. You can see the big move up in 2020, 2021, and then it's been cooling off to what I would consider to be more normal levels back in 11 through 2019. So it looks like it's normalizing to what it looks like to be a pretty normal area, at least from what I got. Mike Zaccardi says 2-year yield is now 4.34% ahead of the Fed, the lowest in almost 6 months. So the 2-year yield has been coming back down. That generally front runs a Fed funds lowering of interest rates. So that is front running that move at this time. And if I were to guess, and by looking at the 2-year yield coming back down, that there is a probability, a good probability that yields do get lowered out in the future. The Kobayashi letter says, breaking predictions market price they price in an 80% chance of a Fed rate cut in September after today's Fed decision. The odds of a September rate cut have risen nearly 25 percentage points since July 1st. In every meeting since 2009, the Fed has done exactly what the market was expecting it to do. Is a September rate cut coming? And the market is expecting that rate cut to come, and that's why the 2-year yield is coming lower. So how does it know what it's going to do? The banks are part of the banks, and the banks position in this stuff before a Fed rate cut does occur. So they know what's going to occur before it occurs, and they front run it. That's what they do. Ivy Zellman, she's big in real estate. She warns affordability grind isn't going away anytime soon. In the next 1 or 2 years, Zellman only sees mortgage rates declining by 0.5%. So that's what she is predicting for interest rates or mortgage rates in the housing market. Seth Golden says the average household has 40% more cash deposits than in 2019, with total cash growing 13 trillion to 18 trillion since 2019. The only stress that households have is whether or not to fly Delta or United. So households have 18 trillion in cash, up from 13 trillion pre-COVID, and a big move up in how much U.S. households have in cash. So it's not a dire situation that maybe some people think. Katusta Research says Chilean state copper miner Codelco has struggled with a slew of mine accidents, production delays, and other technical issues the past 2 years. Production at the world's largest or third largest copper miner is down, while costs are on the rise. So you can see the copper production declining, while cash costs are increasing rapidly since 2021, 22, and 23. Rapid inflation. Coming to my post here, lots of negative sentiment around uranium at the moment. URA still just doesn't look bad. So this is URA divided by the uranium futures pricing. Yep, we're at a very low valuation level for the most part, uranium equities. I used URA for all the data, the previous data going back to 2011. This still looks absolutely excellent, guys, for an entry point here in the uranium equities. So I'm a believer. I just wish more of these companies made some cash flow than what currently has. But here's another one. Holy moly, Silj, primed and ready to go for silver junior miners. Looking at this ratio, we have definitely broken out of the downtrend here from a really low point. Last time we broke from these levels down here it went up 1, 2, 3, 4, 5, 6, 7 months, had a monster move. Is something like that going to repeat from the level that we're at today? And if we were to do that and go back to these levels up here, it's a little over 2x. So SILJ, the silver juniors, would outperform silver itself with a 2x plus leverage for that move. So if you're looking at silver and you're a big silver bull, SILJ is one to look at this time from a momentum breaking downtrend standpoint and from how cheap it is. Has good alignment. And here are the physical metals themselves here. So gold looking strong, and I imagine silver will be doing well as well. Gold coming up to about $2,500 a share. That's a new all-time high, guys. That looks fantastic. We've got silver that also has broken out of its big long-term trend line and is primed for a big move, in my opinion. That move could result in a big cup and handle breakout pattern, which we've broken the upper side of the handle. And if you take the handle going across this way and project it upward, which is the size of the cup, putting it on projected on top of the handle, I get around a $300 something price of silver. This shows 350. So I think silver is in an absolute excellent location for a large move higher. And with SILJ located where it's at, I can't imagine what SILJ could do if silver materializes to something even anywhere close to that size of a move. So, yeah, that's looking absolutely excellent there. So the summary of the Fed decision that occurred on 7/31, Fed leaves rates unchanged for the 8th straight meeting. The Fed reiterates no rate cuts until confident inflation is moving to 2%. Inflation has eased but remains somewhat elevated. Fed says there's been some further progress on inflation. Attentive to risks on both sides of the dual mandate, unemployment rate has moved up but remains low in their opinion. Is a September rate cut really guaranteed? I don't know if it's guaranteed, but that's what the market is pricing in, and that's what the 2-year yield is showing us. We've got Lance here. U.S. home price growth over the past 24 months, May 2022 to May 2024, is up 5.6%. U.S. home price growth during prior 24-month periods, May 2020 to May 2022, is up 40%. It was not the national correction homebuyers hoped for. However, it did mark an end to an overheating, perhaps. So that's what he's got here. We've got that nice overheating occurring between 20 and 22, and recently it's only been up 5.6%. Uranium Insider, the JV Inca production miss is significant due to the sheer size of the deposit and its historical and expected consistency of production. It's the light blue segment of this graph here, which is this guy here coming down. This looks like a pretty nasty profile peaking out and the ramp down. Looks like the ramp down starts around 2031 for Kazatomprom's production profile. But it looks kind of interesting. Peter Sutherland says, oil sharply higher as the Middle East lurches towards an ineluctable broader conflict. We'll keep saying it. The risk of supply disruption is real and growing, and we think those who advise fading geopolitical risk will be burned. I don't know for will target Carg if needed with no qualm. We've got Seth Golden here. 3 months after first rate cut since 1954, the S&P 500 has been higher 66% of the time. The positive return rate only increased 6, 12, and 24 months forward. So rate cuts are more often a bad sign than a good sign is false. Stop saying stupid crap, part 28. So he's saying that after 3 months after a first rate cut, the S&P 500 has been higher 66% of the time. Rukits and Mayhem, what happens after the first Fed cut? It all depends on the strength of the economy. If the economy does not enter recession, the S&P 500 average gains of about 12.5% over the year that follows. If the economy does enter a recession, the S&P 500 averages losses of about 13%. So that's what it would be if you're trying to time the market. If it does enter a recession, the average loss is 13%. The psychology of money, it says getting money and being able to keep that money are two vastly different skills. Getting money requires action, taking risks, being positive. Keeping money requires just the opposite skills, playing safe, being fearful, and a lot of inaction. And that's the psychology of money. So that's where we're going to end it, guys. Give me a thumb up there. Subscribe to the channel. Subscribe to the website. That's all I've got for today, guys. So we'll catch you later. This is Finding Value.